All right, good afternoon, folks. Testing 1 2 3. Testing 1 2 3. Just want to do a quick audio visual check with you. Type a 3 in the chat if you can see my screen and hear me. Please do a type a 3 in the chat, or a free, or an A-OK. Apologize for the slide there. That was typo. It is at 4:30 Eastern, not 7. All right, folks. Let me get situated here. Go ahead and get something to drink. Glass of water, Kool-Aid, beer, whatever it is you want. Get relaxed, comfortable. We got some more folks kind of trying to get in the room here, and we'll get started here in about 30, 45 seconds. All righty, folks, I'm back. It is 4:31 p.m. Eastern in my neck of the woods. Let's do one more quick check. We had some folks piling on in here, and just want to do another quick audio check and visual. I am sharing my screen. You should see mechanical done for you strategy, any market, any time frame. Give me a hooyah, a hi, a free 3, A-OK, 10-4, that you can see and hear me now that we're back on. All right, awesome. Thanks, guys. All right, let's go ahead and get started. I don't want to waste anybody's time. You are here for mechanical done for you strategy, any market, any time frame. Very excited to be here. We did a presentation last night. I was asked to come back. We had a huge crowd, a lot of interest, a lot of folks that weren't able to attend for whatever reason. So I was asked to come back, and pleased to do so. Very happy to do so. This is my favorite, probably my favorite topic, one of 2 favorite topics that I enjoy presenting on. Why? Because it's actually something that I believe in, I use, I live and breathe every day, and really excited to show you what I have in store, show you this very simple strategy that everybody can literally begin applying immediately after the presentation. You could probably start during the presentation, but I would ask that you please watch. But welcome, thanks for spending time out of your day. Wow, what a day, huh? What a day in the markets. Huge moves, a lot of volatility, a lot of opportunity. Could be dangerous though if you don't know what you're doing. Stick around to the end. I want to show you what kind of action we had today in various markets with this volatility and with this strategy that I'm about to share with you. So really excited. We've got good stuff. So stick around to the end. We're going to look at the S&P. We'll look at some futures. We'll look at stocks, whatever other symbols, ETFs, things like that, other markets that you want to look at, and we'll see how it all did. So let's go ahead and get started here. We have a good audio visual check in store, so we're going to go ahead and move forward. Before we start here, we must always begin with our risk disclaimer as required by our regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So I know we are all adults here. Everybody, or most of you are, I hope. No children under 18. Risk disclaimer here. Everybody's familiar with it, but it is serious stuff. Why don't you go ahead and do me a favor while you're reading it. Tell me where you're from. Where is everybody attending from in the world? I am in LA, Lower Alabama on the Gulf Coast, and keeping my fingers crossed and praying that I have no internet outages. We had some bad storms come through today. Lost internet, had to run to the Verizon store by Wi-Fi or MiFi and get some backup, but we're all good here. So Minnetonka, Minnesota. I'll be up in Jackson, Minnesota in May. Stuart, Florida, Connecticut, Sterling, Virginia, Melbourne, Winnipeg, Madison, Alabama. Roll Tide there. Another Michiganite, Jersey, LA, but the Los Angeles version. Glenwood Springs, Wisconsin, or Colorado rather, Wisconsin. Awesome. People from all over the world, London, awesome, welcome. Let's go ahead and get started. My name is Silas Peters. I am the founder and head trader of Seasonal Swing Trader. This is me standing in front of my alma mater at the University of Alabama in Tuscaloosa with my two beautiful daughters here right before a football game. And 3 days after I graduated from the University of Alabama, I sold my car, packed up my small belongings, and I moved to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade, and here where I was really bitten by the trading bug and never looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large force spec traders, and the like. I've also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office sales, and support. Also worked as a private family office investment consultant. I hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. So appreciate that, Jeffrey. David or Madge says no audio. Just want to do one more quick check, make sure we're all good here. Oh, awesome, Larry. Have individuals say he traded in the bond pit for 27 years. There's an individual that I know who was a bond king. I'll have to sidebar with you about. Audio still good though, before I continue? Dave's from Chi-Town. Yeah, I love the city, hate the weather. All right, audio's good. We're gonna keep rolling. Let me respond to Madge, tell her to refresh or log back in. All right, let's keep it going. All right, so that's me in a nutshell. Enough about me, let's talk about you. Does your trading desk look like this? Hopefully it doesn't. This is actually not my trading desk. I thought it was a funny picture, if you will. Found it on the internet because I feel like it's what the perception is from people outside of the trading world. It's what they think that we're doing, sitting down in a basement looking at all these monitors and screens and colors and widgets bouncing and blinging all over the place. Not at all. This is not my trading desk. I do have a handful of monitors dedicated to charts, trading platform, quotes, and then of course, internet for day-to-day operations. My desk did look like this, actually very similar in Chicago for obvious reasons. Wasn't as dark and clammy, but the point is we do not need that. We do not need this. All this is clutter and noise prohibiting our decision-making process, which brings us to paralysis analysis. Are you a victim? So raise your digital hand. Are you a victim? Have you been a victim in the past? I'm raising mine. I've been a victim. We've probably all been there, done that, got the t-shirt. Per Wikipedia, it's a state of overanalyzing or overthinking situations, the decision or action never taken, in effect paralyzing the outcome. So who here has done all the analysis that they thought they could possibly do? They go to their trading platform, go to their mouse, get ready to click the button, and then something pops up that may contradict what they are looking at. It's a very real thing. And we're going to hopefully show you a way that you can eliminate the noise, eliminate the paralysis analysis so we can make our logical decisions. So yeah, a lot of people are or have been victims. I appreciate everybody's interaction so far. Tell me what you trade. I'd like to see who I'm talking to. Do you trade stocks, options, futures, Forex, cryptocurrency? Any or all of the above. I actively trade stocks, options, futures, and Forex. I do not actively trade crypto. I have accounts across the World Wide Web. Don't even know how to get into half the damn things, but I view it more as a lottery ticket. But the point is that what I'm going to share with you momentarily works in all these markets. So we've got options and futures and stocks and options, a couple of Forex folks, no cryptos yet, all of the above. There you go. So good, a nice mix and a nice healthy mix of different assets that people are trading here. So what I'm going to share with you works in all those markets that I just showed you. It's highly accurate, it's profitable, works in all time frames, and it's 99% mechanical. But most importantly, it is simple. We're not here to teach rocket surgery. We're going to keep things very dialed in and simple, and I'm going to show you proof of what happened in today's markets with this strategy. So my agenda and promise to you today is we're going to learn this simple mechanical setup that is repeatable regardless of the market or time frame. So at some point during the presentation, I'm going to ask you, have I fulfilled my promise? And I hope to see a lot of resounding yeses. Speaking of promises, this is the $10,000 trade promise. You may have, if you're here today, you may have read something, seen something about the $10,000 trade promise. Full disclaimer, I'm not going to promise you anything. I never do, never will. I'm not going to promise you anything in trading or in life, but these were $10,000 trade opportunities that we talked in multiple free presentations, just like the one that you're in today, as well as in our membership options about trades that we're potentially setting up. If you can see here, this is crude oil, RBOB unlead gas. We also had very similar situation in natural gas. We talked about a very specific pattern coupled with another idea that could lead to a $10,000 move, and that's exactly what happened. We also shared sleeper markets. Again, in free presentations such as this. This is coffee and orange juice. You can see here from a 5, 15, and 30-year historical price perspective, markets tended to bottom out at these particular times of the year. Does that mean that we went and got long these markets or went and bought these markets? No. We sat on our hands and waited very patiently for a very specific pattern, the one that I'm about to teach you here in a few short moments that you're about to learn, and they went on and materialize into $5,000, $6,000, $7,000 per contract. We also talked about corn, soybeans, and wheat. Again, you can see from a 5, 15, and 30-year historical price perspective, they were starting to get quiet, bottom out at this very particular time of the year. Does that mean that we went and loaded the boat and got long those markets? No. We had to wait patiently for the pattern or the strategy that I'm about to share with you set up, and that's exactly what happened. Those markets, all three, corn, beans, and wheat, went on and met their $6,000, $7,000, $8,000 per contract price objective. Now, this is not all about futures, not all about commodities. It works in all markets, as I've already told you. But just the point is, these were markets that set up all the time that we shared in multiple presentations. So who here is ready to see the setup responsible for the equity curve below? Need to update this for 2019, hell, even into 2020. It's going to be pointing sharply higher. Who here is ready to see the setup? All right, everybody. Of course you are. You wouldn't be here. It is the 1, 2, 3 pattern, also known as the 1, 2, 3 top or 1, 2, 3 bottom. So who here is familiar with the 1, 2, 3 top and bottom pattern? Everybody should. I would expect 99.8% of you to be familiar with it. I didn't invent it. It's one of the most fundamental technical patterns in the textbooks, Technical Analysis 101, but highly, and I mean highly, overlooked by most traders. In fact, it's one of the first patterns that I learned in my journey as a trader. I put it aside. I went and chased fancy indicators, had shiny object syndrome, and I lost my edge, lost my consistency. I went back to what's working. Let's talk about the setup. It's price action based. Pattern is comprised of a low and a higher high and then a higher low and a break with the higher high. In the case that we're going long, inverse of short, anticipates a change in trend from up to down on a break below the 2 or the B point, anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. So you may argue that it's a counter trend strategy or a reversal type strategy. And in essence, it is, but we're going to talk about filters and ways to increase the probabilities in our favor. Also, we'll stress that it works extremely well when the pattern sets up at important or significant areas of support and resistance, head and shoulders, tops, bottoms, double tops, double bottoms, other high probability technical patterns. So let's take a look at the basic mechanics. Don't worry about what asset class this is or what time frame. It doesn't matter. We're learning the very basic principles here. Point 1 is the highest peak when we find resistance and then move down. So you can see that the market moves down, bounces up, market moves down, finds short-term support, bounces up. That gives us an established number 2. Market makes lower highs here and then pulls back, giving us our established 3. So we have a 1, 2, 3. And then we know we're looking to get short on breaks or closes below the number 2. So look at the 1, 2, 3 bottom pattern. Here we have the market coming down, finding a lower low or the lowest low, which finds support, trades up and then back down, giving established number 2. Once the market can, stops making these higher lows here, we get an established number 3. So the market could have traded down here, even down here. As long as we don't take out this number 1 low, and we have a valid 1, 2, 3. We know we're looking to get long on breaks or closes above the number 2. Let's look at some chart examples. We'll start off with the 1, 2, 3 top. This is a daily chart of the Aussie, the 6A, the Aussie dollar, Australian dollar. ETF traders could look at FXA. That's the ETF that tracks the Australian dollar. You're going to see the exact same pattern setup. So on a daily chart, we primarily or ideally like to look for 52-week highs or 52-week lows. Those are going to give you your highest probability setups. You can dial that back, dial that in a little tighter, excuse me, say every 90 days, every 6 months to give you more opportunities. But for today's example purposes, we're going to focus on 52-week high or 52-week low. So here we have a number 1. Why? It's a 52-week high. That's where we start our new count. We have a number 1. Market trades lower, finds support, trades back higher, giving us established number 2. We only retrace back to the upside by about 4 or 5 bars there and then pull down. So we have a 1, 2, 3. Market again, the market could have traded up here, or even up here. As long as we don't take out the 1, we have a 1, 2, 3. We know what? We know that we're looking to get short on breaks or closes below the number 2, which is what happens right here. So you say, great, Siles, that I know where to enter, but where do I put my stop? Where do I take profits and all that good stuff? Very good question. Pretty important. So our initial risk must always be placed up here above the number 1 high. And our target is simply the distance between the high of the 1 and the low of the 2. We measure from here down to here, and then we measure down below the number 2. And that gives us about 225 ticks or $2,200 per contract in this example. So you will see right off the bat that yes, it is initially a 1-to-1 risk reward ratio, with your risk being here, your target being down here. But as we'll talk about in later slides, we have the opportunities as the trade starts to materialize and start to move in your momentum or in your expected direction, where we can quickly tighten that risk up. As you can see, the market starts to break down. We can quickly cut our risk by 60 or 70%, move it down to the next area of resistance, and so on. Excuse me, I got to take a sip of water here. All right, let's look at another example. This is a 1, 2, 3 top on Walmart, WMT. We have a number 1 high here. This is number 1 high. Market pulls down, then back up, giving us a 1, 2, 3. We know what 99% of traders struggle with. Well, where do I enter? Where do I put my risk? Where do I take profits, and so on? We know all that well before the pattern or the setup even triggers. We have 1, 2, 3. Several days go by. We know where we're going to get in and what we're going to do after that. So we know we're getting short on breaks or closes below the number 2. You know our initial risk is up here above the high of the 1, and we know our target is the distance between the 1 and the 2. The high of the 1 and the low of the 2 measure down, which is about $5 in this example. You can see it traded down and met target. Let's look at the 1, 2, 3 bottom example. 1, 2, 3 bottom example, 15-minute chart of the E-mini S&P on a intraday basis. So let's talk about number 1 points on an intraday chart. On an intraday chart, whether you're looking at a tick chart, a 1 minute, 5 minute, and so on, we're obviously not looking for 52-week highs or 52-week lows. That wouldn't make sense. So the way I define a session low is I'm going back to the Globex session. That means that if you're not familiar with futures and Forex, they trade darn near around the clock, 23/6, opening at Sunday afternoon on 5 p.m. Central, trading through the Asian session, European session, into the US session, shutting down in the afternoon for about an hour, open back up, rinse and repeat until Friday afternoon. So wherever you start your trading day, I start mine around 6 a.m. Central. I'm leaning left, or actually I'm looking left. I'm starting back, and then from that point forward, I'm looking for new highs or new lows. I'm looking for only new highs or lows. So if you start your trading day at the 9:30 Eastern cash open, maybe the lunchtime session, maybe even the last hour of the day, you're only looking for new session highs or new session lows from that point going forward. So here we have a 1, 2, 3 on a 15-minute chart. Aggressive traders will have work buy stop, say a tick or two above the number 2 high, which triggers you into the trade here. A couple of alternative entry methods, more conservative entry methods, would be either to A, wait for the market to bust up and then come back and retest, or 2, wait for the market to come down and hook back up above the breakout level. So the market comes down, hooks back up above the breakout level right here, which triggers you into the trade. Now, that entry method is a double-edged sword. One, it's going to keep you out of potential winning trades. Sometimes we bust up above the number 2, it zips up the profit target, and you miss the trade. Don't worry about it. There's plenty of trades, plenty of other time frames to look at. Don't worry about missing a trade. There's plenty of other trades around the corner. But on the flip side, what it will also do is keep you out of potential losing trades, potential false breakouts. Sometimes we'll bust up right here, and then we'll fall back down and get stopped out. So I like this method here. We bust up and we have the added confirmation of trading back and through. It's the safer route. Here is a weekly chart on Apple. AAPL, weekly chart of Apple. Really a hell of a way to do some position trading, catch some longer term moves on a weekly chart. Here we have a 1, 2, 3 multi-week low. 1, 2, 3 also have a high probability pattern in the double bottom. Market breaks out above the number 2 here on this large bullish candle. Trade sideways for a few weeks, comes back down and retests and or hooks back up. That's where we get long Apple. We buy Apple stock, we buy call options, call spreads, sell out money put spreads, whatever your style of trading is. Now, here is an example of a failed trade. They don't all work. There is no holy grail. I know you're big boys and girls, we already know that. But I like this trade setup. It might have been a trade I actually took in my live account. We have a vertical uptrend here on a 5-minute S&P chart. 1, 2, 3, broke the uptrend or broke the trend line there. I like the setup. 1, 2, 3, market breaks down here if you're getting short on the initial breakout, or if you wait for the alternative hook method, you wait for the market to come back and hook back down. You're up maybe in profit 1 or 2 S&P points there. But what happens? Market decides to reverse. If you exercise any type of money management, you're stopped out here above the number 3 high at the next area of resistance. Or if you didn't do anything, you're stopped out here above the initial stop level, above the high of the number 1. And notice here in this example, we had a new setup. This is a new number 1 count because it's higher than that one. 1, 2, 3, get short below the break of the 2. You can see you get a couple of retests there, and off it goes into profit. Here's an example of a no trigger trade or voided trade. It's neither good, bad, nor ugly. It's just a no trigger trade, and I'll tell you why here in a second why I like this scenario. So here we have a 1, 2, 3. We're looking to get long on breaks above the number 2. Market trades lower, taking out the number 1 low right here. We void the trade. We start the count over. 1, 2, 3. Looking to get long on breaks above the number 2. Market breaks down, takes out the number 1 low. We start the count over. 1, 2, 3. Finally, are able to get long here on this 3rd attempt. Now, why do I like when this happens? We likely are having some type of divergence. We're getting a better value buy, or in inverse, maybe a better value sell. So what is divergence? I'm sure everybody is familiar with divergence, whether you use RSI, MACD, stochastics, or some type of other momentum indicator. We're having lower price action here, lower lows, lower lows, lower lows, but we're making higher lows, or i.e. not making lower lows on our favorite divergence indicator. Again, RSI, stochastics, MACD, doesn't really matter. That's not a requirement. It's just another added confirmation, another added tool, again, to help put odds in our favor. 1, 2, 3 pattern trade management. Again, confirmation of entries on a break above the number 2 or B point for a long, or a close below the number 2 or B point for a short. Exit strategies. You're only trading 1 contract, whether it's 1 futures, 1 option contract, 1 Forex contract, or 1 share of stock. I would strive to go for the distance between the 1 and 2, as we just covered. It's uncanny how more often than not, the market will tag those levels and often reverse. Now, if you have the flexibility to trade multiple contracts, futures, options, or multiple shares of stock, that's where you have the ability to scale out at different levels. And that's really where your own trading style, your comfort level, and things like that come into play. I like to target good old-fashioned support resistance levels, basic trend line analysis, moving averages, but really there's multiple ways: Fibonacci numbers, 2 to 3 bar candles, channels, all kinds of things. You have to choose what works best for you. So I've already shared that the setup works in any market, whether you trade pips and Forex, petty stock, pot, potash, or pot stocks, pork bellies, or the Polish zloty. Also said it works on any time frame, whether you trade tick, 5-minute, hourly, daily, and so forth, and on any trading style. Are you a position trader, a swing trader, a scalp trader, day trader, tick trader? What is your trading style? I'm going to pause here for a second, get another swig of water. My throat's getting really scratchy, but tell me what your trading style is. All right, so first couple came in were scalpers. Scalping's tough. Usually get a lot of swing, and I'm seeing a lot of swing traders in here. Swing trade options, swing and position, day and swing, position only. Cool. So really the point is that you've got to find out what your bread and butter is. You've got to find out what your bread and butter is. For me, I found that the 5-minute on the S&P, NASDAQ, crude oil, currency futures, occasionally a 30-year bond. I like swing trading off the 4-hour or the 240-minute on currency futures and other commodity markets. And then of course, daily to swing trade all markets, equity, futures, Forex. That's where I got started in my trading journey, is learning to trade off of end-of-day charts, no live data, long before the days of everybody checking our quotes and charts sitting in a cubicle. I didn't have that luxury, if you want to call it that. So I check my charts at the end of the day, in the evening or early morning, do my analysis, place my trades, go off to the workplace and see what happened. It's probably the best thing that could have ever happened. So you've seen the proof. Let's look at some real trade examples. Not to say that what we just looked at were fake examples, but let's look at some real trade examples that were utilized in our services. So we're going to take a look here at the first example, and that's crude oil. You guys and gals can read all this text over here on the right side. I'm going to look at the chart and work from left to right. So everybody's familiar with crude, probably one of the most heavily, if not the most watched market in the world, whether you trade crude futures, CFDs, USO, other ETFs, or energy stocks. Everybody likes to track crude oil. So here, starting with this first example, we have a 52-week high. 52-week high that gives us a number 1 point. We then come down and then trade up, giving us a 1, 2. Market makes a short high here at number 3. Does not surpass that high. 1, 2, 3. It is a smaller or compressed 1, 2, 3. I will give you that, but it is a valid 1, 2, 3 top nonetheless. We knew in advance where we're looking to get short. We knew where our initial risk was, and we knew what our initial target was. It was about $3 or $3,000 per contract. We have a 1, 2, 3. Market breaks down below the number 2. We have a couple of days of retest, meets our $3 or $3,000 per contract price objective, and then goes into range bound action. So you may say, well, you miss out on this trade. This is a nice 1, 2, 3 inside of a range. You can trade range bound 1, 2, 3s all day long if you want. I don't personally. I'm looking for new highs or new lows. But this is one that potentially worked out. 1, 2, 3 went on into nice profit. So then here we get a new number 1 point. Why? This high is greater than this high, so this is a new count. 1, 2, 3. We knew immediately where our entry was, where our risk was, and where our initial target was. And let me tell you why I like this setup. 1, because of the high probability technical pattern that we just talked about, or what we've been talking about here, which is the 1, 2, 3. Secondly, we are at a time of year from a seasonal perspective where I know that crude oil in the energy complex in general typically trades to the downside. So when those things line up, I start licking my chops and I get really excited. So we shorted this market. We put this alert out. We shorted crude futures. We traded USO. We sold call spreads. We bought put spreads. met our first profit objective, and then we trailed the market until we either A, got stopped out, or we had a reversal. This market ended up trading down over $20,000 per contract. We didn't catch that entire move, but we damn sure caught a large chunk of it. Now, we get a potential reversal here, 1, 2, market trades lower, potential here, 1, 2, 3. Let me tell you about this setup. Again, got very excited here, 1, 2, 3, potential 1, 2, 3 bottom after a huge move. You can see we're consolidating. Secondly, we have probably my second favorite chart, our technical pattern, which is a triangle, very beautiful, clean triangle pattern right here. And then thirdly, is we are now at a time of year from a seasonal perspective where the energy markets tend to go higher. In fact, this is one of the best seasonal trades that is in my bucket, is getting long energies right around this time of the year. But you know what happened? We waited for confirmation. Instead of getting long prematurely because we did what we thought it was going to do, the market broke down, and it broke down another $10,000 per contract, and we had to wait patiently for it to find a bottom. And it did. Bottomed out right here. We get a 1, 2, 3, breaks above the number 2, met its $5,000 contract objective, and then some. And I want you to remember this chart and the subsequent charts, because I'm going to show you something really special here in a little bit. Let's look at gold. Everybody likes to talk about gold. Here are 3 examples. Daily chart, 1, 2, 3, breaks down below the number 2. We get a couple of retests. I love seeing the retest and the failure of those retests. We short gold, we buy puts, we sell call spreads, whatever your style of trading is. Market breaks down, reaches $4 price objective. Here we have a 1, 2, 3 bottom, also have a double bottom. Market breaks above the number 2, jostles around for a little bit, hits its $2 price objective. And then we go trade sideways. So similar to that crude example. Maybe I missed this right here. Maybe I missed this range bound trade. I'm looking for new shorts, looking for new longs. But again, another nice pattern, 1, 2, 3, market breaks down and sells off nicely. We start making new lows. These lows are surpassing these lows, so we're starting new counts. We have new potential 1 points, 1, 2, 3. Market trades lower, taking out this number 1 low right here, if you can see my mouse pointer. So we start the count over. 1, 2, 3. Finally get to the last setup here, gaps 2 days higher in a row, pulls back, gives a trend line retest. And that's where we buy gold, buy call options, sell out of money, put spreads. When I look at futures and commodities, I prefer to look at the actual futures or commodity contract as opposed to the ETF. It's gonna be a lot cleaner, a lot more fluid because you're trading around the clock. You're not gonna see all these gaps. But if you don't want to touch futures with a 10-foot pole, you can start with the ETF. You're gonna see the exact same pattern setups. Here is a daily chart of Delta Airlines. It's probably becoming redundant by now. You can see 4 examples, 1, 2, 3. We gap up above the number 2, come back and retest, $4 move and then some, 1, 2, 3. Market gaps below the number 2, but never comes back. I don't chase these. I have members and students that will trade all these setups, so they're aggressively buying puts, selling stock. I like to wait for the retest or the hook back down, and then we have another chance or another opportunity to get short here. 1, 2, 3. Market trades aggressively below the number 2, gives a small retest and goes down $8 plus. Then we have one last long trade here. 1, 2, 3. Market breaks above the number 2, sideways, higher, back down to the retest, and then another $8 plus. For you Forex traders out there, this is a 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. Here we have a multi-session low on a 4-hour chart. 1, 2, 3. Also have a double bottom. Again, the aggressive traders here would be getting long on breaks above the number 2. If you wait for the retest or the hook method, you're waiting for the market to come back down, hook back up above, reaches 70 pip profit objective quickly. Here we start new counts. 1, 2, nope. 1, 2, nope. 1, 2, nope. Finally get a 1, 2, 3 top, breaks down below, trades sideways for a little bit, goes down and reaches 40 pip profit objective. I get asked all the time to work on an intraday chart. Of course it does. 5-minute chart of the mini NASDAQ. Here are 3 trade examples. 1, 2, 3. Market breaks above the number 2, comes back and hooks back above 13 points or $260 a contract. 1, 2, 3. Market breaks down below the number 2. Trade sideways here. You can see we're wicking into the number 2 resistance area. Finally breaks down, reaches our 20-point profit objective. And then we get another flush down here at the probably the last hour of the day. 1, 2, 3, breaks above the number 2. If you're lucky enough to get long on the retest there by a tick, you're filled on your 30-point profit objective in about 2 bars. So with this recent volatility, now it's a perfect time to explore the micro contracts, the micro contracts that were released in 2019 by CME, micro S&P, micro NASI, micro RUSSI, and micro Dow. Great way to trade this strategy without getting your face peeled using the micros. They're about 1/10 of the size. So I'm sorry for the cough. Why are you here? You're here to learn my mechanical done-for-you strategy for all markets and all time frames. Have you seen enough proof? This is the point of the presentation where I'm going to ask you, have I fulfilled my promise? So I'm going to ask you, have I fulfilled my promise? Type in yes, and if you feel that I haven't, type in no. I would love to see your honest feedback. All right, awesome. If I could take a screenshot, I would say everybody is saying yeses. I appreciate that. If you said no, I'd have to reevaluate what I was doing and go back to the drawing board to see how I could break it down even in a more simple matter. But wait, you know there's more, you know there's more. But usually when people say this, it ends up being a bad thing. I can assure you this is going to be a good thing. You are in for a treat. What if this strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there was a pending 1, 2, 3 setup? Yeah, I would be pretty excited too. So do you remember the chart examples we just talked about? Crude, gold, Delta, NASDAQ. Remember all those chart examples? Hope you do. It's just a few minutes ago. Here's that same chart of crude oil we just looked at with a special proprietary 1, 2, 3 indicator added to the chart. I know you're smart people, but let's talk about what all these arrows and colors mean. Green arrows, your number 1. 2 is your number, green arrow is your number 1. Red arrow is your number 2. Blue arrow is your number 3. 1, 2, 3. Now, these white chevrons or stealth signals, what are those? It's not a sell signal. This is not a buy signal. This is telling me that this is the bar or the candle that broke or penetrated the number 2. This candle took out the number 2 low. This candle took out the number 2 high. So it's a visual aid waving to you saying, hey, we've broken the number 2. We could have a potential trade setup. So if and only if we break that number 2, you're going to see the white chevron print on your screen. And if and only if that happens, you're going to see these 4 beautiful lines plot onto your screen. Well, what are these? The blue line here could be considered the breakout or the entry level. Your red line is your risk or stop level. The lime green line here is what I call a TP1, take profit 1 or profit objective 1. The dark green line is TP2 or profit objective 2. Remember the lime green line, TP1, is simply the distance between the high of the 1 and the low of the 2, and TP2 is 2 times TP1. Okay, easy enough. Now, why do we see all these green arrows here? Green, 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 green. It's because we're making new lows. New lows, new lows, new lows. Finally stop making new lows, pull up. We have a potential 2. 1, 2, 3. Market breaks down, takes out the number 1 low before we broke above the number 2. Remember this example here that I was just foaming at the mouth to get long at? 1, 2, 3. Market breaks down, below the number 1, we're starting new counts. So since we didn't take out the number 2, no chevron print, no pretty lines print. So here we have a 1, 2, 3. There's that last trade example hitting TP1 and TP2. No repainting. Here's the gold example. 1, 2, 3. We break above the number 2 right here. Finally get it closed. TP1, TP2. Here's that range bound trade we talked about. And here is the market clearly trying to find a bottom. We get multiple ones right here. 1, 2, 3. Finally, our last low. 1, 2, 3. Market trades above the number 2 high. Boom, boom, comes back and retests its TP1, TP2, and you see we're starting to find a new 1, 2, 3 top pattern. Here's the Delta example. There's a long example, short example, short example, long example. Here's the NASDAQ example. 4 trade setups, break down below the number 2. We hug the number 2, give it multiple retests, breaks down, takes out, hits TP1, hits TP2. TP2 to the tick actually happens to be a session low, so we get a new number 1. Started 1 count, 1, 2, 3. Market breaks above the number 2, hooks back above, hits TP1, almost hits TP2, but close enough for government work. You should have been in profit there. And then trades range bound. So does it work in range bound markets? Yes, it does, because it's only looking for new highs or new lows. So here we have a 1, 2, 3. Market just nips its head above the number 2 here. Market comes back, trades above, hooks back above, hits TP1. As we're searching for TP2, we're making session highs. Finally get taken out there, TP2, get a session high, 1, 2, 3. Market breaks below the number 2, comes back up, then back down, hits TP1, TP2. So hopefully that makes sense. Is this training for you? If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about earlier, the paralysis analysis, indicator overload, if you just want to simplify your process, or if you want a very specific step-by-step mechanical plan, this could be something for you, but only you can answer that. And this is something that you can do part-time. So I'll tell you a quick story. Before I kind of released this out into the wilderness, I brought my wife down, who was a ballet teacher, brought my 2 girls down who were like 4 and 5 at the time, who don't know a flying flip about the markets. They don't even know what I do. So I showed them what I was trying to accomplish, what my objective was. And after they got past all the excitement of the colors and the candles and all the blinking lights, settled down, showed them what I'm trying to do here, and they got it. They understood the objective. And so my point is if they can understand it and get it, you certainly can too. So with that being said, I have a special offer for today's workshop attendees, and I do limit this to 25 people because I am a human and I can only have so much time in the day. I say that because I actually monitor my own support box. I love working with my students and members, so I can limit it to 25. I do have support. So what is this offer? It's called a 3S code HighLow indicator scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to get a chart pattern principle PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support that I just mentioned, and weekly high-low scan updates across stocks, futures, and Forex. So what the heck is the 3S code HighLow indicator scanner? Let me refresh your memory. It's exactly what we talked about. This is the 3S code. This is the 3S code on a daily chart of Crude. You can see it plotted here, short, short, long. Here's the daily chart of Bank of America, BAC. Here's a long trade, here's a long trade, here's a long trade. Here's a daily chart of Love, LUV, Southwest. Here's a short, hitting TP1 to the tick. Here's a short, whoops, that's a losing trade. Get stopped out, get another chance to go short. 1, 2, 3, boom to the downside. Remember when I said let technology do the work for us? This is a screenshot of my platform in Thinkorswim. I'm scanning for 1, 2, 3 tops and the Russell 1000. Only stocks that have options on them. $20 a share or greater. I hit the green scan button, voila, I get my results. Here's a screenshot of some of my watch list. I've got one monitor dedicated to multiple watch lists, scanning multiple asset classes across multiple time frames. You can do the exact same thing. So we've been looking at Thinkorswim. This is what it looks like on TradeStation. Here's your indicator component. Here's your scanning component. Here's what it looks like on NT8. Here's your indicator component. Here's your scanner component. Here's what it looks like on TradingView. 4-hour chart of Apple. You see right here on Apple. And by the way, we also have labels added for the other platforms. And here's what it looks like on MT4. 4-hour chart of the Euro Kiwi. Long, short, short, long. And full disclaimer, the scanning component only is available on TOS, TradeStation, and NinjaTrader 8. There is no scanning component on MT4 or TradingView. As I said yesterday, if you know somebody, you know, a Russian or somebody that is good at programming, by all means, make an introduction, introduce them to me. We'll have that puppy built for those two platforms. But right now, the indicators available on all, the scanning component only available on Thinkorswim, TradeStation, and NT8. So we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a process each day. When technology, when my platform scan the markets for me, locate the setups, go to my platform for entry, and then manage the trade until the exit. And you can start doing the same today with the 3S code. So here's the offer, 25 spots, 3S code, HighLow indicator scan for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4, chart pattern principle PDF manual, trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and weekly HighLow scan setups across stocks, futures, and Forex. Now, we recently had this on the internet at these prices, $19.97, $14.97, and $9.97. But because of a special we're able to offer today, we're going to release this for a one-time fee of $397. $397 is a one-time fee, gets you access to everything that you're seeing on this page and everything that you saw on those charts. I'm going to put that into the chat box for you so you can click on it. Offer link is seasonalswingtrader.com/code CODE. And if you have any problems, you can email me at support@seasonalswingtrader.com. Support@seasonalswingtrader.com. So yes, I'm going to answer all of your questions. I've got a lot coming in. I love the interest. But let me get through because I want to show you everything else that you're going to get. So let's talk about the indicator scanner. Again, you're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas with the entry, exit, stop, target levels, all color coded, customizable settings, multiple look back periods, scan for setups only or trigger only, scan for 1, 2, 3 tops, bottoms, or both at the same time, scan for intraday setups or swing setups at the same time, scan for any instruments all at the same time, stocks, ETFs, futures, Forex. If you want to change the size of the arrows, you want to change the colors, you want to change the look back period and dial tighter to find more trades, you can do all of that. It's all customizable to your liking. And in fact, we have gone back and taken a lot of feedback from our members and students over time and have enhanced this and didn't charge a single red cent for any updates that we had. Frankly, I don't know what else we can do, but we will provide any updates like that at no charge. Bonus 1, chart pattern principle trading manual guides, 90+ page PDF that you can download to your desktop, print it out, read it, do whatever you want. We're going to talk about how to read charts, identifying trending range markets, additional strategies, options, seasonal market trends, and more. Bonus 2, 25 top option strategy guide, literally strategies for all account sizes, whether you're just learning to trade calls and puts to more intermediate advanced, such as condors, verticals, butterflies, diagonals, and more. And then bonus 3, access to weekly HighLow scan updates across stocks, futures, and Forex. We update that once a week. It's embedded into the member area in a nice little area where we're scanning for end-of-day setups on stocks, futures, and options. Now, you have access to the scanner yourself. you have access to scanner yourself that is unique to you based on the parameters and variables that you input and hit scan on. But we do this just as part of one of the bonuses so you can easily reference. Here is some proof of individuals using the 3S code. These are unsolicited. They come in all the time. I don't ask for them, but I'm happy, I'm humbled, and then but more importantly, I'm happy that people are actually using this to make trading decisions and actually profiting from it. So here is an example of an SMS text alert that went out with another one of our services where we're using the 3S code and made trades on crude, unleaded gas, pound, euro, nat gas, and more. And like I said, I do eat what I cook. This is a real-time snapshot of my equity account, or my, my Thinkorswim account, where I do most of my equity options trading in my futures account, where you see I've got crude options, cotton options, copper options, yen options, nat gas options, and the S&P. And then again, just in closing here, that it's a nice, just another example of a nice 2-point trade here in the E-mini S&P. Nice, clean, easy 2-point trade on the S&P. So here's the offer again, seasonalswingtrader.com/code, $397, one-time fee, gets you access to all platforms. You get access to all platforms. It's not one or the other. You get access to all. And I'm already seeing questions here. Can I load it on multiple platforms? The answer is yes. I run it on Thinkorswim, TradingView, and MT4 every day, loaded on all platforms. I have accounts with TradeStation NT8. I just don't use them. So the answer is yes. And yes, you can add to multiple computers. Does it work on a Renko? Yes, it does. I don't trade Renko, but yes, it does. Works on anything with price action. Do I send alerts? So the alerts are based on your platform. For instance, my scans and setups and parameters are configured in Thinkorswim, where I am alerted based on a setup. Now, you'll have to check with your individual platform if it can send out alerts. I think some of them do, some of them don't, but you need to contact the provider to see if they can spit out alerts. I'm not sure about TradingView and MT4, but we're going to look into that. Yeah, absolutely. You can use on options. I do options all the time. Yes, we will look at that symbol. We'll look at the markets here momentarily. I do not have it on Sierra charts at this time. We just have not had enough demand. No Schwab either. This is technically Schwab, I guess, right? Schwab bought TD Ameritrade, which runs the Thinkorswim platform. Larry, we'll keep it in mind though. We'll keep it in mind. We just we've had so little request, but we will certainly take a look at it. Yes, we do offer support. Like I said, VIP email support. It's right here, second to last bullet. If you can turn the computer on and you're able to log into the webinar here, you should have no problem. It'll probably take you maybe 5 minutes to get up and running. But we do have support that can provide additional assistance should you need it. And my guy can even do a remote login to your computer and help you get set up. That's available free of charge. We don't want to leave anybody hanging, anybody high and dry out there. We want to make sure you get set up properly, so you are good to go. So let's, I'll show you the documentation. There are tutorials. It is recorded, yes. Can't ever guarantee anything with technology. And I had a couple of people saying the sound was spotty, but was the sound good for everybody else? I hope it was. So here is what you're going to see in the members area. Once you log in, you're going to go up to products and go to SST3S code. And here is the weekly HighLow scan update. You'll click the black plus sign drop down. You'll see the list. Here is all of your resources: trading signals, understanding the study, customizing, setting up scans and watch lists, day trading, swing trading, unannounced bonus materials and education over here. Here are all your guides, video guides, PDF guides. Here's adding a little seasonality widget, how to set up the scanner or for trigger only or setup. I'll explain what that means. TradeStation V10, V9.5, NinjaTrader 8, TradingView, and MT4. So what this means here, as I was saying earlier, we've made some enhancements over, not really over the years, but just over time. And when we first had it built out, we had it available to only find setups, meaning those that have not triggered yet, meaning they're in the process of setting up, right? And that's what the scanner would find. So I had a couple people write in and say, hey, this is awesome, but can we have this built to find those that have triggered, meaning they've already triggered through the number 2? And so I said, well, let me go back to the programmer and see if we can make that happen. And we were able to make that happen. We added it, again, made an announcement, and didn't do any charges or anything like that. So you can choose to have these set up either way you want. All right, yeah, I got another Sierra request. Good deal. All right, thanks, Larry. No, this is not a membership. It's a one-time fee. Yeah, we are going to look at your symbols here. So let me just take a moment here and we'll do just that. And with the volatility, I'll explain to you my charts and kind of what I'm looking at so you have some context. All right, let me know, can you see this chart? This is a 5-minute chart of the mini S&P. Can you see this? Hello? All right, thank you. So this is today's action on the S&P. Obviously, we're very volatile, and I'm going to share with you why I had no trades and why I really haven't had any trades on the S&P this week on a 5-minute chart, and greatly to the extent of last week too, not just because of the volatility, but because of the setup. So I don't take every trade here. There are some things that I look for. Again, it's about adding probability and things to our favor. I'm looking for crosses here. I want to see, you see the 2 short-term moving averages here are spread apart. They have not crossed. That is not a valid entry or valid signal for me. Same thing here. As we were breaking down, the averages were above, have not crossed. The price action was not below. That is not a trade for me, but that should not keep us out trading. Dial down, and we'll look at some daily charts here. We can dial down into shorter time periods, such as 233 tick, 1 minute, whatever, Heiken Ashi, whatever it is that you may want to look at, and you're going to see multiple setups. You're going to see both short and long setups all day long here on the lower time frames, should you choose to do that. I know scalping's not for everybody, or maybe you don't trade the S&P, maybe you trade the Russell or something like that. That's totally fine. I'm just showing you how it works and what I'm looking for. And again, you've got to, especially in this market environment, do not be greedy. Take your points. See here, we're coming up to 80–90% of profit objective. No trade here. I like to see closes above the number 2, price action above the averages, and the averages have crossed. What's another thing I like to see? Divergence. So we have lower lows of the session, higher lows on the RSI. This is a higher low than this low. Those are three different pieces of confluence that help guide me into my decision making. This is a trade I would have taken, would not have taken that. Plus we're at 3 o'clock, I think, so I wouldn't be trading anyway. But you can see these examples right there. When price was breaking below the number 2 and closing, moving averages were already crossed. It's a good trade. And when this 200-day moving average right here that I have overlaid, it acts as a magnet. It's an awesome additional thing to add. This is a one-time fee. This is a one-time fee, not a monthly fee. You don't rent it from me, you own it. And is it lifetime? I mean, technically it is. You know, you own it, you can download it, and you can part ways, but I hope we stay in touch. You know, I'm not going to be around forever, but we will continue to support it as long as I am. So here are a few more examples here. You know, there are literally dozens. You know, we're like, what are we in, like the last 5 minutes of the trading session? So I'm just showing you another textbook trade here. Another textbook trade, new highs, lower lows, averages have crossed. We've traded down below, retested, we've come back down, and good for a nice couple points there. Let's take a look at crude oil. Let's take a look at crude oil. I think it just works incredible on crude. By the way, I forgot to mention this earlier, is we are building this out right now in a backtest with backtesting. So we are backtesting right now. We're building out a separate backtester, and we're looking to build an automated program, automated feature to, if you want to call it an EA, a robot, or whatever you will, to trade this on our behalf, because it's impossible to catch all these markets and all these time frames. The crude here, very active. Textbook trade right here. Textbook trade, break above, retest, or we get the hook back above. TP1 is right there into moving average. Again, see how it acts as a magnet. It's hitting TP1 and TP2. Another perfect trade right here. Break down below, get a retest below the averages, hits TP1. You can see all the potential there. Let's look at some symbols that people are typing in here. Let me look after the euro currency on the 233 tick chart. The win-loss ratio is really, you can't calculate it, because there are hundreds, if maybe even thousands of different variables here. It all depends on what people's settings are. These are all customizable. If you want to see, change the minimum bars between, you see the 1 and 2, the depth level, the retracement percent, how many bars back, the number of minimum bars break, what's your look back period. Everybody is going to have something different depending on what their settings are. I think this is out of the box. These are the out of the box settings. You want to make sure you can change your custom look back to true or false, depending on this number right here. So the win-loss ratio, it's really, you can't calculate it because of all the different settings. And what I would say before even how you manipulate the settings is, how are you managing the trade? Everybody manages their trades differently. Where are you entering? Do you use any of these filters? Do you trade purely naked? Do you remove all the moving averages? Do you ignore things like I do not ignore, I will not trade right into the 200-day. I won't buy into the 200-day. I won't sell right into 200-day. If the 200-day was right here, I wouldn't sell into it. I look at price structure, look at past structure. Where are you, again, how are you managing your trade? Are you, when you get down to 50%, 75% of profit objective, are you moving your stop to break even, maybe next area of resistance, maybe even locking in some profit? I think you get my point, and I'm not, you know, I'm not trying to batter anybody. I'm just saying that a lot of different things. Really nice trade there on the euro currency, nice short. Here was a nice long here. I mean, perfect long setup here at 850. Went up and tagged TP1 to the tick. No trade here. See how the moving averages are not crossed. I'm not making this up. This is what happened today. We'll look at the Japanese yen. Look at the Japanese yen. Yeah, we'll look at bonds and gold too. So here's a trade on the Japanese yen, crossing down here. No trade. See how far apart we're spread against. We look in the European session. It wasn't up, but let's see if we had a trade in the European session. Trade in the European session, bounced up, hooked back up above. TP1, they're acting as resistance. Why I say don't get greedy, target TP1. Let's see, 5-minute bonds. 5-minute bonds today. Let's see what the old 30-year did. Yes, Ninja Trader 8. Ninja Trader 8, not NT7. You're having problems, download, email us support at seasonalswingtrader.com. We'll get you fixed up. Thank you to everybody too that says they're on board. Appreciate that. So here is today's action in the 30-year bond. If you're awake at 5 a.m., there's a good short from 173.05 down to 172.24. Remember, each tick is $31.25 a tick. Maybe, you know, here's a long on 172.10. Would have missed this trade. It's a great trade, but because of where this 200-day was, I would want to see a pullback, and it never pulled back. You see, we kind of bounced up and hung out, and then we went and met TP1. Goldilocks. Let's look at gold on a 5-minute today. So really had no trades today in gold. This is a trade that, you know, basically we met TP1 on the breakout. I mean, we did break right here, which triggered the pattern, but I don't, this happens a lot. You'll see the peaks, the fake outs. I want to see a close below and then a retest, or a close below and then a hook back down. We never got it. This trigger right here, averages had not crossed yet, and we're late in the day, so I'm ignoring that. But we can go to a 233 tick chart and see if we had any setups in gold. So here in gold, we did have a setup at 1 o'clock. And you've got to be cognizant again, you know, if you're trading into the 200-day, you don't have to put that onto your chart. It's not a requirement, but it helps me know that, hey, we've got some potential resistance here. I better jack my stops up or take some partial profits in case it does reverse. Sometimes we'll trade through it, as we all know. See if we had any other setups. There is a good long trade. There is a great short trade. Didn't meet TP1, but it got you good profit, and then it reversed and went long. So that's what it looks like on gold. All right, let me look. The VIX. Let me look at VIX on a daily. All right, so just absolutely going parabolic here with all this volatility. VIX on a 15-minute, okay? VIX on a 15-minute. Let's see what kind of last few days of action here. Ignore the purple big arrow, that's something different, but traded kind of right down there into TP1. And then we had that long trade. Let's go back and see if we have any other setups. Man, I don't trade 15-minute VIX, but it looks pretty good. Go back to PFE. Pfizer, so yeah, we do have a 1, 2, 3 in play, or we have a 1, 2, we have 1, 2, 3 formation setting up, I should say. 1, 2, so we're still, still plotting number 2. Once we stop making highs, so we have high, high, high. Once we get a pullback, that'll be an established number 2. All right. McDonald's. Once you order, and how do you get the product? You're going to get a welcome email. If you haven't gotten it yet, check your spam or junk folder, but you should get a welcome email almost immediately. Have all of your login credentials, and you'll be able to log in. You'll be all set. Again, if you have any problems, let me know. McDonald's. No setup, because see, this low is not lower than this low. If this low was lower than that low, we would have a new green arrow or a new number 1 point. But it's a good thought, and you can trade these. You can trade these. So like right here is a 1, 2, 3, but my indicator did not pick up the plot because of my settings. These highs needed to be higher than those highs. Yep. Ford, 1, 2, 3. Yep, there's a 1, 2, 3. So it's like $7.40 ish, 676. So you measure from this low to this high, and then measure upward, project it upward. Looks like it's going to take you right. Your target's going to be right into this area of resistance, right? That's what we like to see, and that happens often. It really happens more than you think. The targets are going to happen to be right at important areas of structure. That gives it more validity to the trade. Vector Vest, Smart Investor. I mean, I'm part of Vector Vest, but it's not coded for that platform. You're welcome. So it's a 200-day average on the big purple line, 200-day average. The shorter terms are 5 and 21s. Yes, it is recorded, but again, cannot guarantee you that technology is picking it up, but it is being recorded. Why am I using 233 ticks? It's just a student and I had, as part of just getting good quality feedback. I would never traded off of a tick chart, never had any interest, and I told him such, and he was very persistent and kept telling me that I'd have to look at it, and I said, wow. I was amazed at how good it was on a lot of markets, but really the handful of markets that I pay attention to, and it's actually what prompted me to look into getting this thing coded, or not coded, but automated. So we're building out an automated strategy, and everybody that gets involved with the 3S code now will be grandfathered into a really great discount when we're able to release that. So everybody that owns the 3S code will get an incredible discount on the automated piece when we're able and ready to release that. We've been working on it, a lot of things to go through, and then we'll release it out to the general public. And I'm taking feedback too, by the way, for all owners. So we just recently did a kind of a poll or a questionnaire out to all the owners, and to tell me what's working, what's not, what settings they're using, so we can look at incorporating various pieces of those. But I share with you once a week. I do a video, I put it on YouTube, send it out via email, what's working for me. You can check that on YouTube, things like that. Donald, email us at support@seasonalswingtrader.com. It's probably in your junk folder, but email us at support@seasonalswingtrader.com. Thank you, Andrew, Davis, Jason, Dylan. Shelly, I'm just looking through the questions here. Yeah, I'm not haven't looked at their options platform. No, this is a 200-day 200-day EMA, and then these are 5 and 21s, so short-term 5 and 21s on. Yes, in the members area, you will see all the platforms. You'll see all the platforms. I'll be happy to show you again. Here. So once you're logged in, here's all of your training. There's some videos, some PDFs. If you think or swim, scroll down, trade station, NinjaTrader 8, trading view, and MT4. Yeah, most of these platforms are free. You're not going to need it won't work on a demo account, at least on the Thinkorswim demo. So you'll need to actually have a funded account. But I mean, I think you can fund an account with like $500 or $1,000, maybe 2,000. So just put some money in there, and so you can have a live account, and that way you can get the indicator locked and loaded and run the scanner and then test it out. Jeffrey, I'm not familiar with all that, but you can email it to me and I'll take a look at it. No, I do not send alerts out on the 3S code. I do not send trade alerts out. I do have a membership service where we do send trade ideas based off of technical patterns, seasonality, things like that. And a lot of times the 3S code is certainly involved, but I'm looking for, I'm looking for certain things. But as part of this is the indicator scanner. So I don't send out alerts based on 3S code. Now we are entertaining something like a Telegram type situation, like a Telegram room, if you want to call it that, or a Skype chat, or maybe a private Facebook group. If people are interested, and there are people that are interested, but we don't have a trade room. All right, PXD, really watching the energy stocks closely here. So yeah, so here was a trade that had set up. I would have been leery of the 200, and then we also have earnings. I don't trade into earnings, but so this was our last short, and then here was our last long, and then we have a 1, 2, 3 set up right now. And you'll notice that it's setting up at long-term support. So I like that. Last time we had that here, we had a nice move. Those are kind of things that I look at. I would like to see the 5 and 21 cross, yes, but on a daily chart, long-term charts, I don't put as much emphasis on it as I do. I mostly use it for added confirmation on the intraday charts. All right, one more, J-Nug. Yeah, so this is something you need to be aware of too. I mean, this is so rare. We basically had a number one high and a number one low plot in like 5 trading days or something, just because of this volatility. When these things are really wide, I don't chase them. Wait for the good quality setups. There are so many different markets you could look at. All right, gang, I think I've gone well past my time here. I want to thank everybody for attending. I love this stuff. I love your questions. I love your feedback, your interest. Thanks to everybody that have joined. I look forward to working with you, getting your feedback, comments, how we can all work together in a positive manner, how we can improve things. Always looking for feedback, and we welcome it and enjoy talking to the students and clients on how they're using it. you know, it's all good. So I really value everybody's time here. And Donald will hook you up. Don't worry, we'll make sure you get your welcome email. Others have said they're already in, so must be some deliverability issue there, unless it's not in your junk or spam. But we'll hook you up. But anyway, we're going to wrap this up, guys. Thanks again. Y'all have a great rest of your day, rest of your week. Good trading, good luck, stay safe out there, and we'll see you on the flip side. Take care.